Hey everyone, welcome back to CryptoCache. Thank you again so much for joining me here. Hope you're having a phenomenal day. Happy Labor Day to you. If you're in the States, you celebrate that kind of thing. What we're doing here is just taking a quick look again at Bitcoin. I won't have a ton of analysis today, just kind of making a quick little update here for you folks, because there's some really cool patterns here. We got a somewhat of a descending wedge pattern here, and this is potentially a bullish sign here with a bullish back to that descending trend line. We've also got our macro here, this 0.5 fib level, if I recall correctly, right around this base of about 57,000, being a potential support level for us. Okay, so again, we're going to talk about that and kind of look at that too. So if you are new to the channel, just want to say welcome aboard. Hope you can learn something today. CryptoCache.tech is the site, link down below if you want to become a better trader. All right, so let's take a quick look at the back end data, kind of see what's going on. We'll start with liquidation first and see where we're at. So when we were last looking at liquidation, 57K was that heavy concentration, which it still is. A lot of late longs there at about 57K. It makes sense to do it buying that dip just because of how overextended things were leading into it. We shorted into it with Ethereum, and if I'm not mistaken, we made a decent percentage off of that trade. 31% for Ethereum, and then of course we maxed out our AVAX trade about 57%. So good trades to the downside, essentially. It's still a bearish market for the most part. But again, there's some signs here that we're shifting momentum, right? So we'll take a look at that here as well. But let's quickly verify a couple of other things before we look at that. So we got 60,000 to 62K starting to build in liquidation there. Those are some late shorts and some early shorts. If we zoom out though, of course, just to give you perspective, 54 to 52,000 is kind of that rough estimate for that range of heavy liquidation. And then uniquely enough, there's kind of some newer areas here down as low as about 48 to 47K. And those are some later longs here kind of coming in the recent past, and they're extremely low leverage. Those are probably like 2 or 3x leverage. And those are trades that are taken with extreme safety, which I like to see that, because obviously those are situations in which we could very well see some liquidation there as well. Keep in mind stop losses are part of that too, so some folks have their stop loss way far out. Obviously, if it's low leverage, you can survive those kind of trades, right? The key takeaway, I would say, is try not to get too crazy with leverage, just because, again, you will be eaten up on fees, and it's not really all that ideal, but whatever. To each their own, right? So let's take a quick look here at the daily time frame, work our way down. In fact, why don't let's go with the monthly, just give us perspective, because the monthly did close. I think I reviewed this a couple days ago, but generally speaking, the monthly was a pretty bad. There's no other way around it. If we look at our SMAs on our monthly too, we're still overall in a bullish trend, right? So you got to recognize that the overall trend here is still good. We have a favorable type of pattern here as well, descending, broadening wedge pattern. Those have a pretty high success rate. So I still think that Bitcoin is due to continue higher. Is it due to continue lower first? That's what we kind of still have yet to find out. We're going to find out if there's any bullish or bearish divergences here. My speculation is we're going to see some signs to buy today, just based on smaller time frames, of course, but that happens when you have the price selling off all weekend long, right? People are just naturally going to want to buy because it feels like a good value. Anyways, monthly time frame, most everything here is showing that it's shifted momentum to the downside, but the overall sentiment is still bullish in the sense of simple moving averages and a scenario in which it's not like this is not dire straits by any stretch. All right, we've been range bound between 55 and roughly 70K as a rough estimate there for a while now, right? Ever since March. So again, 6 months worth of chop. It's run its course, but it's also par for the course too, if that makes any sense. Okay, so taking a look here, we're close to 50 on the RSI on the weekly, really just kind of hanging the line here. There's nothing too crazy here as well, minus the fact that we want to be over the 20-day SMA. We have to hold the 50-day SMA in my personal opinion. I think that's important. So that's right there at about 54K. Again, potential for further downside, but it's getting less and less likely at this point. But again, there's a lot of different scenarios, obviously. But generally speaking, from a macro perspective, we're still in good shape. So let's take a look here at the daily and kind of work our way down. Let me go ahead and remove this text because it kind of gets a little muddled here, and just kind of explain a few things. So first of all, with the situation here, this could very well be the lowest point, 57,000. We have a descending type of wedge here. Those are generally bullish. They don't have a tremendously high success rate, but if you combine that with other things, it might work out. I'll dive into that deeper when we get to the smaller time frames, but on the daily here, when we look at the overall moving averages, right? Because again, it can kind of be hard to see them if you don't kind of understand what to look for, but they're all above the price action, basically implying we are bearish on the slight, I wouldn't say the macro, but the larger time frame here, the time frames that make a little bit more sense. We're under 50 in the RSI as well. Money flow index is increasing, but we're finally seeing that stochastic swing to the upside. That's good. We need to see that in order to have that kind of momentum for the price action to continue higher. Okay, so again, when stochastic swings down and then eventually bottoms out, you can expect some support, which is what we're seeing. Okay? Now, the likelihood of the price continuing higher from here is slightly greater based on that sentiment, but it's not a foolproof scenario here, right? We do see MACD losing its divergence, which is good. So we're starting to plateau, we're starting to hit our bottom. So those two things are good. They're very positive, but the overall sentiment is that we're still under some key level resistances. So the price does end up rallying back up. I would say securing profit just below 60K would be appropriate, because that's right there where the 20 SMA is at in the daily. Now, to me, the 4-hour SMA is probably the most important, and that's what we're looking at here, the 20-day SMA. So to clarify, this guy right here, that we are tentatively above so far in this first 4-hour candle, is a very, very good sign. Okay, it doesn't mean we've shifted momentum completely. It just tells us that, hey, we might have broken free from this smaller time frame cup and handle pattern. It kind of looks like there's something like that forming. We can also recognize too, if we take a look at stochastic RSI here on the 4-hour, we're getting close to being maxed out here. It's good momentum, but decent chance we see a slight pullback for the next leg up. Once again, we're under 50 on the RSI here, haven't been above 50 on the RSI for over a week now, and at this point, until we break back up above, we can presume the price will continue lower. However, we've got a MACD convergence as well. This is generally a favorable sign. So a lot of things here are kind of conflicting, but they're slightly more bullish. They're bullishly conflicting. And these are like the early stages that you want to look for to take a consideration for a long position. Now, again, today being a holiday, we generally see less volume. Okay? Traditional markets are closed, or U.S. markets are closed here right now. So I think at this point, it's important to treat a trade with respect if you were to. So make sure you don't get too crazy with it. Ensure you secure profits at realistic targets, and make sure that you're not in a position where you're over leveraging. Okay. Now let's talk about this really quick here. So first of all, we got our larger descending trend line. So to clarify this, the orange lines, I generally like to highlight in orange the more important ones, right? And the reason why that's important is because that was running concurrent in a lot of ways with the 20-day SMA here. Okay. So it's running parallel. Now that the SMA is broken, we can kind of presume that this little trend line has been broken. Okay, but what we want to identify here, of course, is this this descending wedge pattern, right? So if you can kind of see the price action kind of works itself in here, works itself into a little range, and generally the break to the upside. Okay, it's already broken the upside. That pretty much confirms the pattern has worked. But again, a bullish backtest of that trend usually is a favorable sign. And oftentimes what that's supposed to do is basically bounce off the local high, which we kind of haven't seen yet. So this is kind of the only thing that I wouldn't say it's concerning, but again, it's a low volume weekend / holiday. We don't have a ton of support here. But if you do zoom in, you kind of look at this, maybe you go down to a smaller time frame, you can see this standard cup and handle type of pattern, right? Price breaks out and likely retests the most local resistance as a bottom. So 58.5 is the tentative bouncing point from here. If we were to continue higher, I would say, again, securing profits before 60,000 is appropriate. Maybe somewhere along the lines of, 59.5, 59.7, if you're to consider a long. Me personally, I would, even though I'm liking what I see here so far, and I do think it might be advantageous to consider a long with Bitcoin, it just seems kind of a little too early, personally. But that's just me. That's just kind of how I like to trade. I prefer to kind of wait things out. So I might just kind of wait until the Asian market's open and kind of see where we go from there first. But either way, I'll post our playout chart here on our Twitter, Telegram, and Discord here soon. Again, congrats to our community members for some nice profits there. Keep in mind, we do still have this fair value gap here upwards of 60.5 to 62K. So just know that that is an area in which we could still see filled here in the relative near future. But either way, for now, probably best just to kind of avoid trading right now. I know it seems crazy because you look at the market, it's like, oh, look how nice it is. It's really pretty and all that green, which is true. We like to see that. But it's just that natural response to a significantly bearish weekend. Okay, so I still don't trust it being a holiday. That's just me personally. All right, folks, thanks again so much for watching. We look forward to seeing the next one. Have a great rest of your day. We'll see you soon. Bye-bye.